What if I told you that I made over hundreds of thousands of dollars using this stupid simple trading strategy, and not only that it made me money, but I dropped out of school and quit my job, all thanks to it. After years of failing, backtesting, improving the model, I finally refined it to the core, so even a complete beginner, but I mean literally anyone can replicate the results if you follow the rules. So it really doesn't matter which level of experience you have as long as you are following the rules. It has around 70 to 80% win rate, it all depends on how the month actually good is, so I'm gonna show you everything. Let's get into it. So the first question that you need to ask yourself when you come to the market is gonna be direction of today's session, which means is it gonna go to the upside or is it gonna go to the downside? So that's literally the core thing that you need to know. And the good thing is that I developed the best way to know the buzz and narrative behind the market, so you're gonna just ask yourself two questions. So question number one is gonna be, are we sweeping highs or buy side liquidity, or are we sweeping lows or sell side liquidity? So that's gonna be question number one. And in this example over here, you can see we have this price range over here, and we don't care about this internal price section. We mark highs and lows, and as you can see, this low was swept, which means we are sweeping the sell side liquidity. Then the next question and the last question is gonna be, which fair value gaps are we respecting or disrespecting? So as you can see, we have this bullish fair value gap, and you can see that market came here, swept liquidity one time, manipulated the second time, but still we don't have this placement underneath this fair value gap, which means market is still holding with this bullish fair value gap. That is gonna lead us to the last actually question, which is gonna be, which fair value gaps are we disrespecting? And as you can see, if we respected bullish gaps, that means that we for sure need to disrespect the bearish fair value gap. So you can see that we are disrespecting this one over here. This is literally the only bearish fair value gap in the move, and this is the only bullish fair value gap in this whole entire price action. So we have our answers already, and we know what is the direction of the market, because answer number one is going to be, we are sweeping lows, aka sell side liquidity, which means we are collecting orders in the market, as you can see all the way here. So we swept all of this sell side liquidity, and all of those early buyers who are trying to long the market, they are going to be stopped out because they are not waiting for the perfect timing. And then the answer number two is going to be, we are respecting bullish fair value gaps and disrespecting the bearish fair value gaps, which simply means this is the only drawn liquidity that we have left, and for sure market is going to deliver to the upside. I don't know if market is going to deliver maybe to this high, or maybe this high, but we know for sure that it's gonna move to the upside because of all of those confluences. So that simply means we don't need to overcomplicate anything, we are just gonna look for longs or buys, literally only that, and entry model will always present on lower time frame so we can maximize the risk to reward. Entry model is always going to be inversion of the fair value gap, because when you have, let's say this one over here is bearish fair value gap out of 3 candles, and usually what all the other traders are gonna do, they're gonna place their limit orders waiting to this to be, I don't know, retested, and then they're gonna continue with trend. But it is complete wrong approach to the market, because you can see that sell side liquidity was swept, we created the bullish fair value gap over here, bearish fair value gap, and we disrespected that fair value gap inverse to the upside, which means we are going to target the opposite liquidity. And the reason why are we always going to the lower time frame, I mean not always, you can stay on the same time frame, but I like to go on the lower time frame just to have higher risk to reward. And as you can see, this is the picture from the beginning of this presentation. This was the high, this was the low was swept, you can see bearish fair value gap created on the lower time frame, it got inversed, you place your trade here trying to target the opposing liquidity. As you can see, all these highs here, and all the way up here are now swept, and you are on the right side of the market. And trust me guys, it really doesn't get any easier than this, but the problem is that people are overcomplicating their trading. They are trying to add many indicators, many confluences, but to be honest, like, you really don't need all of that to be profitable. So the only thing that I'm gonna tell you before we hop into the live examples is gonna be 3 things. So the first thing is gonna be, if you want to maximize win rate, I suggest you to trade only New York AM session, which means from 9:30 AM until 11-12 Eastern time, because that's where the most volume kicks in, that's where big institutions come into the market, banks and all of that big boys, and most volume kicks in, and it's easier to catch better moves. It's gonna be always easier because sometimes if you are not trading Eastern session, New York AM Eastern session, usually you are gonna get stuck in the chop. So right now you know what to ask yourself when you come to the markets every single day, because it's literally so simple. But we are gonna put this strategy on the test and try to catch some real trades in the live time. So let's get started. Okay, so for the first example, I'm gonna show you everything on the 1 hour time frame, which means we are not gonna switch time frames, we are not gonna do multiple time frame analysis. We are just gonna wait for 9 AM, 9:30 AM Eastern, and then we are gonna take a trade. So we are gonna mark highs and lows in the market, like I told you. And usually you're gonna see, like, this is price action before 9:30 AM. You can see how it's just chopping around, and it's really not that efficient. So I'm gonna just wait. I don't need to do multiple time frame analyses. I don't need to add any indicators whatsoever. Like, I'm just waiting for one side to be taken out, and here we go. So this sell side liquidity right now is taken out. That is question number 1, if you can remember. And the question number 2 that we have, are we respecting bullish gaps or disrespecting the bearish gaps? So we are respecting the bullish gaps, and we created one bearish gap, which means we are just gonna wait for that to be inverse right now, which means market is gonna literally confirm to us that we are gonna deliver to the buy side. And as you can see, this is exactly what happens. So you usually want to see fast displacement, candle closure that has no wicks around, like this efficient price action. I like to call it V-shape, and you're gonna enter the market immediately. And when you are on the 1 hour time frame, 4 hour or daily, you just want to be secure, and you want to put your stop loss like all the way underneath the last candle like this, because it's like more of a swing trade, you know. And I'm not gonna target just this high because it's negative risk to reward. So what I'm gonna do, I'm gonna mark out the next highs in the market, which are these highs for 1 to 0.5, and also these highs over here. If you are really confident about your own liquidity, you can also target these highs for 1 to 2. So if I play the price, you're gonna see how it played out literally perfectly to the take profit. And this is not even a coincidence, guys. This is not a coincidence. As you can see, market even retested here, respected this bullish fair value gap, which means fair value gaps are always gonna tell you the whole story. You just need to know how to read them. Alright, so this is example number 2, and on the 4 hour pretty much we don't have anything. You can see that we don't have any fair value gaps in the move. We are just dropping to the downside. So I'm gonna switch to the 1 hour to have a little bit cleaner buzz, and as you can see, we are respecting this bullish gap, and also we have this bullish gap over here, and also we have, let's say, this low over here and this high over here. So whatever happens first, I'm gonna take advantage of it. And guys, just quick reminder, like, sometimes you don't need to see delivery, disrespect and sweep of liquidity. Like, sometimes sweep of liquidity is enough. Sometimes only fair value gap delivery is gonna be enough. So either 1 or 2 confluences are literally all you need to see. So in this example over here, I'm gonna wait for 9 AM candle to hit, and here we go. 9 AM candle was here. So we swapped this internal liquidity. As you can see, we actually never swapped this low, which is completely fine because we have sweep of the sell side liquidity on the internal price action, and we are still respecting this bullish fair value gap because it never got inversed. So right now I'm gonna go to the lower time frame, and after 9:30, so I'm gonna just replay the price. I'm gonna delete all of these because you know that we are delivering from these gaps, and we are gonna target all these highs, and I'm gonna just switch even to the lower time frame. So on the 5 minute we don't have anything, on the 3 minutes we also don't have anything, but let's see on the 2 minutes, and on the 2 minutes we have something. Okay, sweep of liquidity, fair value gap presented over here. Are we aligned with the timing? Yes we are. 9:46, beautiful. And here we go, boom, displacement to the upside. This is what you want to see always, like literally always, fast displacement. We are gonna enter a trade here, stop loss underneath, like it is a little bit too huge, so I'm gonna put it here because, yeah, let's make it 50 points, and we can easily target literally just this first high. But if you are so confident, you can leave like 50% and 90% of the position running towards the full take profit over here. So if I play the price, you can see how it efficiently played out at the take profit because we are aligned with the market. There is no guesswork, there is no hesitation. When you see something like this, you are immediately in, and that's it. So guys, that's gonna be it of this strategy, and of course sometimes it is gonna lose, but still 80% win rate is more than enough to be extremely profitable day trader. So that's gonna be it guys from this video. I hope that you like the easiest strategy on the whole YouTube scene, trading scene. And yeah, smash that subscribe, like the video, and I'm gonna see you in another one. Peace.